let's have a look at Medtronic. So is it a buy or a sell? So first off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So let's go here to the megatrends. And I have a very interesting theme called internal bionics. 13% here from the low and a minus 39% pullback so far. Okay, here we do see Medtronic diversified in this theme. There is an 8% here from the low, a minus 21.5% pullback so far. So here is the company's website. So when ordinary is extraordinary. Let's just quickly go here to the about page. So who we are. So let's get some data. So yeah, groundbreaking healthcare technology solutions inspire hope and possibility in people around the world. Okay, very broad. Yeah, I mean, this is one of those websites where there's a lot of big words, but it's really difficult really to get to the point here. Okay, so advances in robotic assisted surgery, advantages in robotic assisted surgery, artificial intelligence. So yeah, okay, but basically they're a company in this whole medical devices space, and they have a very big exposure to what I call internal bionics, and that's basically any kind of quote-unquote artificial device that you install inside of the human body. You also have something that I call external bionics, and that is, things like exoskeletons that literally are external. So anyway, here is the chart weekly data points. The reason why this stock popped up on my radar is because we live in very uncertain times, huge volatility. We live in literal war times. And in those situations, it's very beneficial to have stocks that are very tradable in both directions. And the great thing I found here with Medtronic is that it is very sensitive to certain moving averages. They work great for bulls, but also for bears. So if we zoom in a bit here, you see that we are currently facing rejection at the purple 20-week moving average. So as you can see here, it was also a surgical short level back here, but it has also been a very good level for the bulls. It's been a level where the bulls can buy and feel relatively secure. So it works for both people. When we zoom back here, you see that here as well, it worked really, really well for the bulls here as well. Here we have a phase where it works really well for the bears. Here, surgical rejection for the bears. Here the bulls are making money. Here we go below it, it becomes resistance. So it has a long track record of just working. Here we are back to 2016, and as you can see here, let me just draw it in so it's completely clear. Surgical rejection. It is an amazing level. It just works. Bulls, they buy it and make money. So yeah, it's a very interesting technical level. As such, so let's just go to our present time. So yeah, these are the weekly data points. On the daily data points, we do have the blue 100-day moving average. As you can see that if we just draw that in, a beautiful support level here and here, nice safe place for the bulls to buy, but it can also become a solid resistance level. Resistance, 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 and the bears put on short positions and they make money. So it is a highly, highly tradable. For a long time, it simply has worked. Back here as well, surgical. So I think that you would agree that the relationship here between price and these moving averages is far beyond random. This is obviously a real thing. Here, not perfectly surgical, but pretty darn good. It worked for the bears. So yeah, the 20-week moving average and the 100-day moving average are extremely tradable for Medtronic. Meaning, for bullish positions, when we get support on those moving averages, you can become bullish and put on bullish positions. But when we face rejection at that moving average, those moving averages, then it's good for the bears. So in terms of the daily data points here, if we do see rejection here at the 100-day moving average, if we were to climb up there, then that would be a very good place to put on short positions based on the history. So yeah, it just shockingly tradable, really. So in terms of these technicals, we are at extreme levels here on the MACD. We are very we have had tremendous momentum to the downside. We have been very oversold here on the weekly data points. So that's something to just be aware of. On the dailies, yeah, we see a very similar message. But we do see that we are emerging from this double bottom pattern. So let me just draw that in quickly. So here you do have a double bottom that has been working out so far for the bulls. So I think that I will write here 20 VMA and 100 DMA, DMA, and to just put a bunch of exclamation marks because they work both for bulls and bears so cleanly. In terms of giving the technicals here a bit of a rating, so we do recently emerge from a double bottom. We have been very oversold. The problem on the weekly is that we are at a very key resistance level. So in this sense, I will give this very mildly here to the bulls, but super mild, just 1. That is simply because there's such a high probability that we will see resistance at, that especially the 100-day moving average if we go up there, and we do currently have resistance on the 20-week moving average. When we look here at the seasonality, so here to the right we have the average over the last 5, 7, and 10 years. Very bullish seasonality, for sure. Looking here to the left, over the last 5 years, March is one of the strongest months. That's bullish, of course. Over the last 10 years, March is, the second strongest month here for Medtronic. It closes higher 80% of the time. Over the last 20 years, then we can see that from March heading towards May, you do have a very clear strengthening here in seasonality. So that is simply bullish. And so the seasonality here is very strong. It was really, really strong. So I think I will actually give it a 7. This was really, 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 really strong. Then we will look at the fundamentals. And here on SACS, we have a number 3 hold, B value, C growth, F momentum. It's in the medical products business. We do have a dividend of 2.36%, and that is pretty decent for a health tech-ish stock. Market cap $143 billion US dollars, so a bit of a bigger company. When we go here to the insiders, if that is possible. Yeah, okay, so you do see that recently we've seen selling, but then buy, and looking at the shares transacted, the buying has been bigger than the selling so far this year. Looking at 2021, we do see sell, buy, sell, buy, sell. So in 2021, we definitively saw bearish behavior from the insiders, which is not good. Here we have the consensus estimates. So 27 analysts are covering the stock. Average price target is 18% above. Highest is 40% above, and the lowest is minus 1.5% below the current stock price. So these fundamentals, having value on a stock like this, it's good. The dividend is also nice. Price targets were bullish, so I think that the fundamentals here were pretty bullish. So let me give it, I think I will give it a 4. So here we have correlations. So now we are looking at relative performance. So there's a 70% correlation with the S&P 500, 68% with the XLV, which is the healthcare ETF, 74% with the IHI, which is the medical devices ETF, and then minus 64% with the dollar index. Daily data points. Then we have minus 23% with the SPY, minus 4% with XLV, 63% with IHI, and minus 89% with the dollar index. So pretty strong negative correlation with the dollar index, and strong positive here with the medical devices ETF. So what happened with the medical devices ETF is going to have a significant impact on Medtronic. So let's do a quick technical analysis. Yeah, so when it comes to this ETF, I do see a pattern that is not exactly ideal. You do have a head and the shoulders pattern. So that is a bearish technical pattern. We are recently bouncing here from support on the 100-week moving average, which has been reliable in the past, except for liquidation breaks, panic in the market. Looking at, the daily data points. Yeah. This is what I call a very noisy chart. It's not clean for the bulls, but it's not really clean for the bears either. Because the bears don't have like a nice level, like a moving average, to put on short positions. They do have a bit of a diagonal trend line here. Let's see if we can draw that in. So as you can see with this red line, so this is a bit of a diagonal trend line that the bears could use, but yeah, this is just a noisy chart. And that is something I like to avoid, because when you have a very noisy chart, then it becomes very difficult to put on your stop level. That's what I like about Medtronics here, both from a bullish and a bearish perspective, is that we have these very clean moving averages. So it's very easy to know where you put on your stops. But when you have a chart like we just saw with the medical devices ETF, it's very noisy. And when it's very noisy, very erratic, then the stops become a bit wide, and wide stops, they are risky. Okay, so here is the relationship between Medtronics and the medical devices ETF. So yeah, Medtronics has been massively underperforming the ETF for a long time. So yeah, being in the ETF has been much better than being in Medtronics. If we go here and look at seasonality, so yeah, seasonally, Medtronics tends to underperform the ETF heading towards the 23rd-ish of March, but then it starts to outperform a bit. So we are actually heading towards one of those periods where Medtronics tends to outperform the ETF, and that is bullish. Then we look at the medical devices ETF against the SPY, S&P 500. So yeah, the medical devices ETF, it did outperform the SPY very systematically here from 2012, peaking here with the double top in 2020. Yeah, we do see that there is a massive, bearish pattern that's been forming, and that is this rounding top pattern. That is definitively a bearish pattern. Let's look a bit back in the past. Yeah, we don't have that much history here. So yeah, but yeah, this is a long-term bearish development. The big problem for the bulls when it comes to a rounding top pattern is that there's been many times now where the bulls have tried to rally without success, and that becomes an issue. So you have, yeah, so this was like the high, and then the bulls try 1 time, 2 time, 3, 4, 5. So 5 times the bulls have, over a longer period, pushed and pushed and pushed higher without being able to attract more buyers, and that really makes it a lot more difficult to push higher. Because anyone who looks at this chart can obviously see that, above this zone right here, apparently the bulls are not able to attract more buyers. And because of the failure here, during these rallies, these two, we were not able to get above. We got into troubles way earlier than we did back here in 2020. So yeah, it becomes this self-reinforcing effect. Okay, so let's look here at the daily data points. And yeah, seasonality here. The seasonality is bullish though for the medical devices ETF. So there's two things that really stick out with Medtronic and the ETF, and that is seasonality. So really, really strong seasonality for the coming period. And we also see that the moving averages are a huge deal. In terms of the relative performance score, while there were some bullish things when it comes to seasonality, I have already given it a very strong seasonality score, a 7, so it's certainly been benefiting from that. The problem, though, is that Medtronic has underperformed the ETF for quite some time, and we see a massive rounding top pattern between the medical devices ETF and the S&P 500. That is a problem. So this one, it must go here to the bears. So I do think I will give the bears here a -3. So taking all the data together, I do end up with a 2.3, which means that the setup for Medtronic is more bullish than bearish. The big caveat is that we are at moving average resistance on the weekly data points. We have seen from the past that that is strong. That is a serious problem for the bulls. We also have the 100 daily moving average, which is a bit above us. That is definitively a level to watch very closely. So if you are bullish and you put on some bullish position, you definitively want to have a laser eye on what happens when it touches the 100-day moving average. Any sign of pullback, yeah, definitively is a sign that one should tighten the stop quite significantly, because when these resistance levels work on the moving averages, as we saw with the history of this stock, they work really well for the bears, and the bears can get very aggressive and put on bigger short positions. The great news about Medtronic, though, in this extremely volatile time we live in, is that it is extremely tradable. It's been working really well for the bulls and the bears, and the moving averages have simply been amazing in terms of calling when to buy and when to sell, or turn outright bearish. Whatever you do, of course, you do want to be market neutral, and always use stops. If you read the Market Wizards books, which are interviews of the best investors of all time, you will see that there's one thing they all talk about, and that is stops. Most of them got into trouble early in their careers by not using stops, and then from that point on, they always used stops. And that is one of the biggest differentiators between the pros and the amateurs, is the ability to just use a stop level. Managing a position is much more important than anything else.